Welcome to the Wisdom Lifestyle Money Show. I'm your host, Scott Dillingham. The show is designed to help Canadians invest better in Canada and the United States. We specialize in mortgage financing and education in both countries. Discover how you can become a better investor and access the financing you need. Welcome back to the Wisdom Lifestyle Money Show. I'm your host, Scott Dillingham, and today I have a very special guest with us today, Carmen De Silva. Welcome, Carmen.
Oh, thank you, Scott. Good to be here.
Yeah, so I'm really excited to have you on. So for those that don't know, Carmen is a CPA working with Canadians that invest money in the States. You're also a mom, an investor, like you're doing all these awesome things. So I'd love to hear your story on how all this came to fruition and how you got, from being young and whatever to the expert that you are today.
Okay, well, it's a long story. Been in the business for quite a few years. Originally started as a CPA at Pricewaterhouse, did my articling there, specialized in a tax program. So with that in hand, when I got married, I joined the family business and really took our office to what we call wealth management centers, or sometimes they're referred to as family office structures, with the tax estate planning, insurance license, stock license, all of that. So we wrapped ourselves around the top advisors across Canada and really built a portal to integrate solutions, is what I call it. So maybe when the children were, I don't know, around 6, 7, 8, decided to focus a little more on the family and moved to Florida. That's back in 2003. So thought it'd be temporary, enjoyed it enough that we're still back and forth for 20 odd years later, and sold a block of business. So
Okay.
I would say that really I got lucky, because luck, they say, is when opportunity and preparedness meet. And so for me, with the sale of the business, I don't know if you remember the mortgage crisis, 2008,
Yeah, that's when I
opportunities.
started.
Yeah, that's when I really got
Yeah.
involved in single family rentals. Prior to that, dabbled in one property here or there in Canada, but really bought a big portfolio to replace the cash flow I needed from selling the business. Right. And so teamed up with from there, although I was retired at that point, you never stop when you're an entrepreneur. So introduced it to family and friends and really worked with a broker who was also a property management company. He wanted to set that up for his clients. So we really bought in bulk 25 properties originally in Florida, then another batch during the COVID pandemic. I think I can't remember the exact time frame. Another batch of 50. So managed quite a few single family rentals. Started in condos, got out of that very quickly, understanding the mortgage issues with owning condos. And I guess the play that some of the Canadian hedge funds had, even in our properties, one hedge fund bought quite a bit there. We thought we'll ride their coattails, but they ended up selling in 2012 for just currency. So sometimes,
Mhm.
when there's a big block controlling it, it's really hard to sell some of those properties because of mortgages, that the banks didn't like the ownership of so many properties by one entity. Anyway, so I moved more into single family rentals. The issue I had, it was great to buy, very difficult to mortgage though, right?
Mhm.
Banks at that time weren't lending at all. So fast forward when I set up Share, I'm a co-founder at Share, CFO is co-founder of Share. And really we started Share to introduce the concept of buying single family entities from end to end, almost as easy as buying a mutual fund, let's say.
Mhm.
And even how do you reinvest your rentals, that kind of thing. So with that, we started to get more into, and I'm sure that's what you focus on a lot in your podcast. With that, we got into more of the DSCR loans, the idea of borrowing against the property to buy more. So I started to leverage. I took 6 properties at one point, used that as my down payment, and bought two $300,000 properties in Texas. So the idea of building, now I don't really have to use my own cash anymore. Now I build through the portfolio I have, refinancing them to buy more.
Mhm.
So
No,
teaching
that's
those
awesome.
lessons, teaching those lessons to others.
Yeah, and it's pretty cool. And so for those that maybe are listening to this episode before hearing the previous one, so the previous one, we actually had one of your customers on who does mortgages for us, Derek Wormsbecker. So
Oh,
he
yes.
he talked about his journey. So that's super cool. So great. So I know your main role, right? You even mentioned it, is CFO, right? So you're dealing with financials and tax stuff, and being a CPA, I know that's your specialties. What are some things that a Canadian should look at or consider even when they want to invest from Canada to the States? What do you tell your clients that you talk to?
Well, in general, I always say there's three things you should consider when buying, especially in the US. But I think it's there for both sides of the border. My biggest go-to is what's the taxation? So how much tax do I pay? Each state is different. There's tax-free states, but also understanding the cross-border taxation,
Hmm.
right? The fact that you pay in the states, but you also pay to Canada because that's where you're resident of. So with taxation, I'm always saying look at where you're resident of and where the property is resident. Those are the two main factors. So if I'm a resident in Canada, I pay my US tax, but then I also file that same information, my Canadian tax return, and usually getting a foreign tax credit for what I've paid in the US, right?
Okay.
But state-wise, each state also wants to have their taxes. So where you purchase your property is going to be important. So as an example, if I buy in Texas, I have no state tax return, but I still have the federal return to do. Whereas in some of the other states, you might have to file a federal and a state tax return, right? So
Makes
where
sense.
you're resident of as a person and where your asset as a resident of are two key considerations in taxation, right?
Interesting.
Some of the things that most people may not realize is that each state also wants you to be registered in that state. So usually whatever entity that you create, I usually suggest like a parent entity, if you will. I like Wyoming because it's
I'm there.
yeah, it's
I'm
asset
set up there.
protection,
Yeah.
it's privacy. And so I use that more like a parent holding company. And then I'll register that in each state that I'm buying in, or sometimes I'll set up a subsidiary in each state. So I might just do a little, entity under my parent holding company to hold all my Texas properties, a separate one maybe for North Carolina, that type of thing. Right.
That's
So
interesting.
yeah. So again, it's foreign registering to do business in the state you're in,
Yep.
so
Now,
taxation.
Now, I guess it's a bit unique because Trump didn't get into too much details, but I heard or I watched a video last night. I'm assuming it was from yesterday where he said that we should get rid of income tax. And I don't know if he's referring to corp or personal, definitely personal, but I don't know about corp, and then have tariffs for outsiders, right? And then that's how we can generate our income base. So let's just pretend that he does that for corporations. So does that mean then, because there wouldn't be any flow through, right? Because you're not getting that tax credit because you're not paying tax. So then you just pay the Canadian taxes, whatever that would be over here. Is that how that would work?
Well, the first thing is I would suggest that he's probably looking at more corporate tax and personal,
Okay.
because he's really all for businesses, entrepreneurship, and maybe personal too for the entrepreneurs. So first thing first, if it is flowing through the individual and lower tax rates, that's going to be a great deal, right? Because first of all, most of the tax coming from rental properties or the tax planning, let's say, comes more from when you sell the asset, the capital gains tax, than it is on the rental income, right? Rental
Hmm.
income, we can depreciate, we can borrow and have interest expenses. We can even create losses against our employment income or other income. So I'm never as worried about the annual taxes. It's more the capital gains on the sale of assets.
Okay.
So with that said, personal capital gains is going to be better in Canada and the US. So I like personally held income for that purpose. But if it were corporately held, as you said, the rates right now are pretty decent in America. It's only 21% with the state tax, let's say 25, right? The problem though is even if, and this is where this is why I don't usually use a corporation. Even if Trump comes in and says, oh, zero tax, it's really the Canadian government's tax system that you have to follow as a Canadian resident, right? And unfortunately, Canada has gotten worse with I'll call it passive investment corporations.
Hmm.
So if you have a corporation in the US and it's for passive investments, meaning you've got someone else managing the property, you aren't doing all this yourself, you're pretty well paying the same tax rate as a Canadian investment holding company, which is the top rate. You may get the credit for what you pay in America, but you're still at a high rate because of the Canadian tax code.
Yeah, no, makes sense. Yeah, it's really interesting to see.
Yeah. So myself personally, whatever the rules are, I would take advantage of it probably through a personal tax system rather than a corporate one because we have this, I'll call it FAPI, foreign accrual property income. It throws us off a little bit. That doesn't mean that no one should set up a corporation. A lot of people that have their retained earnings built up in Canada may want to deploy that through a company in Canada to a U.S. corporation. So there's a strategy for all types of entity structures. But our main go-to for Canadians is more a flow-through structure.
Understood.
Yeah, yeah.
So that makes sense. And then, so let's say Let's say I'm Canadian, I'm just listening to this for the first time, and I've decided, I want to invest in the States. Do you think that they should use their current Canadian accountant, or should they switch to one that understands both countries? Like, can you have a separate US and Canadian and it mesh well together, or should they get one accountant that does both?
Well, that's a trickier question because for years, when seminars were done by US, I guess, real estate agents, various people that come to Canada promoting the idea of real estate, they never talk about entity creation for not just tax, but also for personal asset protection or probate or estate planning, right? And that's going to be critical when you start to build assets outside your principal residence in your home country. You know, and so having the knowledge of US tax is going to be important because one of the things I notice is even when they do talk to Canadians, they tend to use structures that they're used to in America,
Hmm.
right? And those are wrong structures because sometimes we don't have them in Canada. So I'll give you a good example. The US, they use a lot the structure called a limited liability corporation, and it gives you the benefits of being a corporation. If you want, you can checkbox it to a corporation or flow through. So you've got some, flexibility. But the idea of the protection is why they do it. Now, in Canada, we have no such thing. So we call it a hybrid entity. And because we have no such thing, there's a mismatch in timing. And so the flow through or the credits don't work at the same time. So you end up almost paying a double tax if you're using US structures that we don't have in Canada. So
Hmm.
understanding it from, if you're using a US accountant, they should have some knowledge of Canadian laws or vice versa. If you're using a Canadian accountant, make sure they have a US cross-border tax knowledge as well as, because it is important to understand the two structures and two taxation systems.
No, you're right. And I knew that answer because I'm actually dual citizen and I've had to file tax in the States forever. So I needed a professional that did both.
Yes.
Even things as simple as, I know we're talking more advanced as far as real estate, but even like it goes the other way too, like tax-free savings accounts. I can get that in Canada, but in the States they don't recognize that. So it's not
Well,
allowed. It's forbidden, right?
they have similar things, so they do have, I mean, a Roth IRA is like our TFSA, right? Their IRA, I mean, yeah, IRA is like our RSP. So conceptually there's similar assets. We just have to know which ones are applicable for Canadians.
Yeah,
Right.
absolutely.
Yeah. Yeah. And the other side of it is it's not just about tax and asset protection. In the estate planning side, you almost have to know some rules too, because yes, you may have a will in Canada, but if it gets probated and it's stuck here, you may not be able to do something on your assets over there. So sometimes I like to have a local will in the jurisdiction you bought the property. It's very simple to structure things, but knowing, I guess, the administrative headaches, because it's not always about costs.
Hmm.
Sometimes administratively it might hold up your ability to do things. So it can be simple. It doesn't have to be complicated, but it's just like you said, you need to have the knowledge or someone on your team that's knowledgeable enough to help you through it.
Hmm. No, that's awesome. Now, I'm also curious, right? Because somebody listening to this might be like, "Hey, I want to work with Carmen." How does that work? Can like people reach out to you for this type of service, or do you only do it through Share? Like, how's that set up?
So basically, we're an end to end, really for real estate in the US, single family rentals in the US. So we've partnered up from entity creation so we've got like contracts with, specialized areas from entity all the way to taxation. Right.
Okay.
So at the beginning, we help based on the buy box or where you want to purchase, what state you want to buy in. Maybe we want to know, do you want cash flow appreciation? Is it the first or the only property? Or are you building a portfolio? So, like any good professional, we kind of want to know the time horizon, the rate of return, the objective of what you're buying. Right. So
Hmm.
once we have that, help you set up an entity. After that, our investment team then helps you with the buy box. So we have an acquisition team, and we also have the software to then score the market to see where's the best place to buy based on your selection of cap rates as well as the state you might want to buy in. From there, once that's done, due diligence is done, budgets come in. If the numbers still work, we go ahead with the purchase. We go into leasing mode. So we have a team of property managers that we work with across America. So after all that's done, our role at Share is really an active participation in asset management. So why do people need an asset manager over a property manager? We've got people after they bought. I think there was a client who had 40 properties, but various property managers. So how do you pull it all into one portal, organized so that you can see all the assets, but also make decisions in a more integrated fashion? Right.
Hmm.
So once a year, we kind of look at the investors' portfolio, help them decide is it time to refinance? Do we increase the rents? So we're working on every line item on a real estate portfolio. And because we have institutional grade property managers, Even with our asset management fee, you can be a much lower rate than at the retail level going to a property manager yourself.
Hmm.
Same thing on the insurance. We have a master policy contract, so you get 40% discount on insurance. So when it comes to taxation, because that's the question you asked me, we've also teamed up with tax advisors, tax accountants in Canada and the US, so that if you don't have someone, we can refer you to one of our partners.
Super
And
cool.
and and what's good about that is with consent, we share the file. So we've already got the folder of the entity. We've already got the, your settlement statements. Actually not only got the documents, we prepare all of the financials every month. So we really just feed that into a Schedule E, which is what you have to file the US with the, your returns, whether it's corporate or personal. And that same schedule is what you're going to convert to Canadian dollars to file in Canada. So most documents are already pre-prepared for your accountants anyways.
Hmm. No, I love it. I've seen the back end of your portal, and it's super cool how you can track literally everything. That alone, right? Just not having necessarily having a bookkeeper, right? Because you guys kind of do all of that stuff.
Exactly. It's bookkeeping, it's organizing the documents, making sure the invoices are there if you're audited. All of that needs to, we even on our property tax, just to give you one more area that we've kind of reduced costs, if you will. We've teamed up with a property tax team that not only tells us where on the calendar to pay off the taxes and everything, they actually do reassessment on property taxes to see if they can get your property tax low. That's a very
Nice.
time-consuming project, so most people don't take it on. But because we could go on a fees-only basis, why not? Let them research all our clients. If they find something and we get a discount, they get their share. You know?
Nice.
Yeah.
So do they do that annually? Like, will they review a
I'm
property
not
annually
sure
or?
how often because I think
Okay.
with data science today, we give them our data tapes, we update, they update. We're always looking at where the possibilities are. So I don't even think it's annual. It's anytime that something's indicated, because
Okay.
it could be midstream when someone's gone from one type of ownership to another, right? Because you've got home ownership versus investment ownership. It does trigger certain tax rates that change for property
Yeah.
tax. So they know all the nuances and they know how to fight the battle. So I really like the idea that from all angles, it's not just income tax, because remember, the states that have no income tax are probably the higher in the property tax. They got to make up for it somewhere,
Yep. Yep.
so we got to
Absolutely.
look at all angles of taxation.
And you're right. There are some states, and we don't have to dive into it here, but there are some states that when they discover that it's an investment property, they're going to increase your property taxes.
Well, and that's the
Um,
thing, because remember, we are also helping with pro formas. And so in our pro forma, as part of that team that we've got, they will give us a pro forma once it switches so that we're using the right valuations as well as the right property tax when we're projecting out, when we're escrowing for, because I like to smoothen out income. So we tend to collect a monthly escrow for repairs as well as tax and insurance so that we can then pay the tax on behalf of the investor. So
yep.
we want to get as close as we can to the real numbers. And so we have some of those based on the institutional partners we have.
Mhm.
Mm.
No, it's super cool. It's super cool. And one thing that I discovered about you just from being at different events when you were there or being online and hearing you speak, but this is something that not only you're doing for yourself, right? You're investing, you're building the portfolio and doing all these things, but you're very avid about teaching your kids how to do it. Can you tell me more about that? Like obviously
Yeah,
parents want to inspire, but
I love when the next generation gets involved. I think, when I look at myself and my own personal history, my parents were immigrant parents, and I think we grew up wanting things, the house, the car, the TVs, never wanted to lack anything. So our children see us with everything. And so they're not, I like the new generation thinking they're not into things. They are okay to rent and not buy their first home and have this a big mortgage tie them down. And so my education for the young, these if that's the mentality, is to really buy real estate, buy it early, because that early planning then can help you focus on children and marriage and house later.
Mhm.
Otherwise, you get caught up in a mortgage and then you can't get out into anything else in the investment world because everything is gone. That's the trap sometimes. So investing for cash flow and in tax deductible, because again, remember, my children are all university graduates, so their incomes are high. They're looking for tax breaks. Yes, RSPs are there, but I like the tax breaks that real estate brings too. So my son, as an example, his first internship, he bought his first property. Because in the
Nice.
States, and that's the beauty of it, I didn't realize that till I entered the States and bought my first properties. The price points or entry level properties are like fabulous. You can't
Mhm.
see something like we're in Toronto. My nephew, I remember he was buying a $750,000 condo one bedroom, really small, one bedroom for himself. I said to him, "Why do you need the condo yet? Take that money, 500,000. You can buy 5 properties at 100,000 US, like with the exchange and everything else. And now you've got 5 properties earning 1,000 a month, so you've got $5,000. You can live wherever you want downtown Toronto for that." Right? And you still got assets, you still got performance and appreciation. So we teach our children, our nephews, our nieces very early. So my son's first property he bought on his own. The second one he bought with his sister. This last year he bought with his roommate. So they're continually buying, whether it's single or sometimes shared with a family member. We structure it so each owns their own unit, so one can buy and sell and do their own thing. They're not tied to the hip with
Awesome.
each other. So yeah, so they start early. The downside, and I'm trying to change that, is sometimes they don't even realize they've got this income stream, because the other day he said to me, "You know what? I have to set up a 3 to 6 month emergency fund." I'm thinking, "Oh, great. You're getting to planning," because he set up a bank account. He's got so much cash in there. He's trying to decide, do I put RSP, first time home buyers plan, TFSA? And so he talked about this, emergency fund. And I said to him, "Why do you think you need an emergency fund?" Because the kids are already retired the day they get their first job, meaning they're making as much as their paycheck from cash flow assets,
Yeah.
right? And that gives them the ability to move jobs, think about house moves. There's no restrictions for them. But if he's not seeing that going into his account, it's out of sight, out of mind.
Yeah.
His focus is on the account that his paycheck's going into. So one of the things that we want at Share is to notify them, ping them every time a deposit goes in, every time their assets appreciate in value, because then they can see and feel that cash flow coming in.
Hmm. I
And
love
that's
it.
really important. Yeah, because once you have that sense of cash flow, because really that cash flow mentality helps you create, it gives you a creation mindset, right? Whereas if you don't have a cash flow mind, you have a money mindset, it's always lack. You're always spending, and this lack of money is always there at the back of your mind. And so if we can shift to cash flow mindset, it's huge, you know.
I love it. That reminded me of, I don't know if you ever played it, probably, but Robert Kiyosaki's Cash Flow
Yes,
101 game,
yes,
getting out of the
yes.
rat race. Yeah, you're
Getting out of
helping.
that
They're
rat
literally
race.
out of the rat race
Yeah.
by the
You
time they
know,
have their job.
you say that, and I hadn't played it. I heard so much about it. So a few years ago, someone in one of the investment groups I was with, he had the game. So we put 6 people together. We actually played it. And what I learned from it was awesome. Like, it was just
Yeah.
amazing, because I got this lousy card of, I can't remember, I don't know what kind of mechanic. I was a mechanic, and I was making a very low salary. And I'm thinking, man, how am I know all the rules. I know what I want to do, but how am I going to do this with this little money, right? The person beside me was a teacher, no different. And the one on the right of me, this guy was a pilot making a ton of money. So I'm thinking, oh, doesn't seem fair, even
Yeah.
is what I
He's
thought.
going to win. Yeah.
He's gonna win. That was my
Yeah.
thoughts, right? And so as we pick up these cards, the one on the left of me got a market card, and actually not a market card. I can't remember what the other card's called. He gave her the ability to buy these stocks at a penny, and she bought the stocks. Right. A few rounds later, the option came up. A market card came up that obviously this penny stock went to 1,000 a stock, and she got so much money that she ended up buying assets and developing. Going from house to multis, and she won the game.
That's
Right?
awesome.
She won the game, and I thought to myself, that is so interesting, because to me, remember earlier I said luck is when opportunity and preparedness meet? She was one of those, because it's not only seeing these opportunities, it's being prepared to take them, right? Because
Hmm.
a lot of us see opportunities that just flies by us.
Yeah,
Right. So we got
it's
to take
true.
action in what we see. So that's what I learned from her. But the more interesting part was learning what the pilot, right? The pilot on
Yeah.
the right of me, who I thought would win, he fell on some, whether it was he was having children. So obviously his expenses went up as he went around the corner. He got unemployed, so he didn't get paychecks. And you know what he started to do? He was so out of the game. He started looking at his phone. He didn't want to play the game anymore. And I'm thinking to myself, that's reality too. Sometimes we
Yeah.
check out and we don't see those opportunities because we're so down on ourselves. And so both sides gave me such a good reflection on real world problems. And it's not just about real estate itself, it's behavioral, and so it's a great game to play. Nice to learn, you might learn things like I did from the game.
Yeah, if you want, if you send me your address after, I'll mail you one. I bought, like, this was years ago when they were finishing like making them. Like, I think they said, we're not producing them anymore. And
Oh,
I got them on sale for like a really good price, but I bought like
ah,
20 of them.
I
So I
will
got a
take you
whole
up on
bunch,
that offer.
brand new, wrapped up, ready to go.
Ah,
But it's a great game for anybody who has not played it. It really does. Even if you're an investor, it doesn't matter because I played it when I was an investor. And like you said, you always learn something. But I agree, right? Those higher end cushy jobs, it's always harder to get out of that than something small. And people don't think that, right? They think, oh, I work at McDonald's or like I can't do this. But actually, it's easier for you too once you just kind of get going. So,
Well, and then you know what? I've worked across Canada and I just came back from Banff, Alberta. And I just find mindset is very different from Ontario. We have a lot of employed T4 type of tax returns. So very little planning is done. Right? Everyone thinks, oh, I put my money away from RSPs and I'll get this pension down the road, and that's all. Whereas we're out west, you're finding a lot of entrepreneurial or accountants around these farm-owned estate planning is going on. They're buying more cattle to reduce their taxes because the inventory is going to reduce taxes, right? So they're like we do in real estate, we're refinancing to get more properties to bring down our tax. They're using a lot more tax planning in their models every year. They're communicating between families because of estate planning. All of that's going to help them grow. It's this lack of communication between intergenerational, the lack of planning in general that's going to, they say the bulk of the federal deficit in a white paper for the Canadian government is the death of a taxpayer. Right? Because they've got a lot of money built up with the seniors in RSPs and capital gains tax because we've got this deemed disposition on death. And so planning around that transition is going to be critical.
yeah, I agree. I agree. No, that's really interesting. But we have to wrap up. So do you produce content online or anything for people to follow you, or do you allow clients to contact you directly?
So, I mean, if anything, LinkedIn, but we have a wealth advice. Like, but I would suggest if you go to sharesfr.com, we do have sessions that you can learn monthly and understand real estate, a US guide, even just to understand any of the nuances from being a Canadian investor in the US. So, take advantage of the information that's available. We do have certain calls that are part of that so that, you know, you can understand for yourself your position and any planning opportunities that you might want to talk about.
That's awesome. No, thanks for sharing that. And I'll make sure to put those links in the show notes.
Yeah.
But thanks so much, Carmen. It was really fun to get to know you a little better and to hear your story. So thank you for sharing.
Thanks, God. Looking forward to our sessions together when we do them live.
Absolutely. Sounds good.
Okay. Bye for now.
Bye.
Yeah, yeah. I mean, I don't I like so I maybe what you have to do is send me it, right? So that I can kind of listen to it, see what it was like. My problem, I'm never.
Welcome to the Wisdom Lifestyle Money Show. I'm your host, Scott Dillingham. The show is designed to help Canadians invest better in Canada and the United States. We specialize in mortgage financing and education in both countries. Discover how you can become a better investor and access the financing you need.